Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is April 16th, 2024. Today we're going to take a look at Bank of America out of the financial sector. Let's jump right in. And if you have not done so or are new to the channel and you'd like to help me out, if you could hit that thumbs up button down below, hit the subscribe button, make sure you're subscribed to the channel, join us on this journey to financial freedom, join the Vested Interest community, hit that notification bell so you're notified whenever we put out any new content and you don't miss any videos, and drop a comment down below. Let me know what you think of Bank of America, let me know what you think of the video, and if you don't like Bank of America, let me know what banks you are invested in. Would love to hear from you. Doing all that really does help out a small YouTube channel like me, and it helps get the word out. Investing, specifically dividend growth investing, is what we cover on this channel, and in my opinion, it is the best way to get to financial freedom and out of the rat race eventually. Now, this is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing. And it is how I look at a company that's already in my portfolio and make sure it still meets some of the criteria that I have set up. Do not blindly copy this, but you can definitely use this as a benchmark and tweak it to your own screener as you see fit. Now back to Bank of America, and you can check them out at their homepage, www.bankofamerica.com. That's www.bankofamerica.com. That's www.bankofamerica.com. That is their homepage where I pulled this information from. And again, they are a bank. From saving for a down payment on a major purchase to planning for a living in retirement to funding a college education, people make dozens of financial decisions every day. At Bank of America, we are committed to ensuring our policies, products, and programs all align to our purpose of making financial lives better for those we serve. And that's really what they're about, right? Anything around financial decisions, so checking, savings and CDs, credit cards, home loans, auto loans, investing. So they do a little investing site through Merrill Lynch. Better Money Habits. Looks like they've got some educational courses if you want to take. Really everything around the financial space there is what they cover. They are a typical bank, just like any other bank out there that you may bank with. I use Ally personally for my bank. Bank of America is in my portfolio. We'll see that here in a little bit. So full disclosure, I am long Bank of America, even though I don't bank with them. And the reason we are taking a look at them, down 3.5% on the day. They close out the day at $34.69. We are talking about Bank of America Corporation, ticker BAC, out of the financial sector. 52-week range as low as $24.96, as high as $38.35. They are closer to their 52-week high than their 52-week low currently. Market cap of $273.726 billion. Large cap company here, beta of 1.39, so more volatile than the overall market. 1 being the market, anything under 1 being undervalued, anything over 1 being, anything 1 being the market, anything under 1 being less volatile, anything over 1 being more volatile. And you can see that volatility. It looks like they actually tried to climb a little bit in the morning and then about 10 a.m. dropped off. Price to earnings ratio, $11.26 per share, though we are going to look at price to book. For financial companies like banks, you should be looking at price to book as a metric over PE ratio. EPS, $3.08. Earnings date was today, April 16th, so I'm assuming something around the earnings was negative. Maybe they didn't hit their marks or their future projections are not in line with what was expected. Forward dividend is 96 cents on the year. They are quarterly payer. We'll see that here in a little bit. Nice starting dividend yield of 2.67%. Ex-dividend date February 29th. They paid out March 29th already, so kudos to those of you who are shareholders. I am a shareholder of Bank of America. I am long. 1-year target estimate of $38.99. So according to the Yahoo Finance, where I pulled this information from, they see some upside as far as price appreciation on this one up to $38.99. So that would be a new 52-week high also. Now we're going to look at dividend yield theory. To do that, you'd go over here on the left here. If you were to go to Yahoo Finance, you'd see some tabs you could click on: financials, analysis, and statistics. So we're going to go into the statistics tab. We're going to go down to dividends and splits. We're going to look at their 5-year dividend yield average, 2.4%, compare it to its current 2.67%. Over here where it says forward, same number, 2.67%. And since it is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated. That means if it's higher, undervaluation. If this was lower, overvaluation, right? Just the opposite of whatever it's at. So currently, according to dividend yield theory, this one is potentially undervalued. Payout ratio at 29.87% gives them a lot of room to run and increase the dividend. I like 75% or less, so very low on the payout ratio. Now, looking at price to book, it does not agree with dividend yield theory. Its current 1.08 is slightly above fair value. For price to book, 1 would be fair value. Anything over 1 would be overvalued. Anything under 1 would be undervalued. So you can see here again, at least currently 1.08, we need more of a pullback, at least according to price to book, even though dividend yield theory is saying that it's slightly undervalued. And I would tend to agree. I want this down in the $32 or under range before I am interested again. You can see here going back to December 2023 at 1.03, so still overvalued. About from there on, it's been overvalued. September, it was down to 0.85, so that would be undervalued. You could have got it back in September of 2023, undervalued according to price to book. June 2023, 0.91, still undervalued, and March 2023, still undervalued there, even though it was getting closer to that 1. So for a lot of last year, you could have been buying this undervalued. I was running options on this, and that's how mine got up to around $34. My price cost basis is right around $34. We'll see where it's at here in a little bit. Now we're going to look at free cash flow, right? We want growing free cash flow over time, because if we have growing free cash flow, we typically have growing dividends. You can see here going back to 2020, 37.9 billion, 2021, negative 7.1 billion. So there must have been a write-off there. Same thing in 2022, down to negative 6, and 2023 up to 44.9 billion. So overall, from 2020 to current, you're seeing free cash flow growth. And they are repurchasing shares, and part of that negative free cash flow may have been this huge jump up in 2021 and repurchase. That's a buttload of shares they repurchased. Not as high in 2022, but still a lot in 2023, continuing that trend of repurchasing shares. I like it when companies are repurchasing their shares. And again, I'd have to go back and look at what 2021 and 2022 was going on there, but looks like some big write-offs there. Now we're going to jump over to stockanalysis.com, and I recommend more than one source. You pick any sources that you like. Just make sure more than 1, 2, if not 3, so you can make sure the information you're getting is accurate and up to date. Just don't blindly trust just one source. You could be getting the wrong information or information that's not quite up to date. We're going to look at their 16 stock analysts. They call it a consensus buy, though it is on a hold. And again, for me, it's a hold right now. I want it down in the 32 or lower range, even 30. Their low estimate here at $33, which would be a 4.72% decrease from where it currently sits, would be a better price than what it currently sits at, 38.37, which would be a 10.78% increase from where it currently sits. And they have a high estimate of $46, which would be a 32.81% increase from where it currently sits. All the while, you could collect that 2.7% dividend yield. Now, we're going to jump into the statistics tab here and look at return on equity and return on invested capital. I like 10% or better typically for these numbers. Return on equity, this one's sitting at 8.7%, a little lower than I like, but not egregiously so. Now, return on invested capital is lower than what I want at 3.37%. But if you compare this to other banks, it's about in line with what other banks show. EPS growth, I like 5% or better. This only has 3.49%. That's lower than I like. Revenue growth forecast at 2.82%, decent. Let's jump over here and wrap it up looking at the dividends. So again, my position, I have 160.283 shares. I did recently sell off a bunch of shares. I was running options on it. This ran up into the 35, 36. I think it even hit $37 range. I sold some at around the $35 and some change range and reallocated those funds across some other positions. Well, I didn't really sell them. I just stopped running options on them, right? I had the cash set aside for running options, and it was in the $35 range, got up to 36, and that's just a little more than I'm willing to pay for it. So I just reallocated those funds across the portfolio. So I am looking to add back to this. I mean, I had over 200 shares, 260 shares, so I'd like to get back to that position. But again, I want it under my cost basis. I am up slightly at 0.55%, right? My cost basis is $34.42, just a little bit lower than what it just a little bit lower than what it currently sits. I would like it back in the $32 range, right? It definitely has to be under my $34.42 before I'm willing to add. I probably would be interested 33 or under, really would like it 32, even back to 28 would be great. I don't know if it's going to get there, but if it does, I will be adding to this position. Quarterly payout ratio, again, very low, and I think it said 39%. This says 31. Either way, in the 30% range is very low. Nice dividend growth, high single digit, 8.05% dividend growth, 10 years of dividend growth, buyback yield of 1.07%, shareholder yield of 3.85%. Going back to September 2nd, 2021, they were at 21 cents per share. Raised it up March 2022 to 21. Well, that's the same. Raised it up in, September of 2022 to 22 cents. Raised it up August 2023 to 24 cents. So I would assume in their September, August of 2024, we're going to see another dividend raise if they're going to maintain this 10 years of dividend growth. They do pay out in the March, June, September, December timeframe. Again, long on this one. Would like to add to it. Need it below $33, preferably back in the 32 or lower range is where I'm looking to add to this one. May nibble a little bit if it's dropped down under $34. Like I said, 33, 32, somewhere in there is where I feel like it would be a little undervalued. Even though dividend yield theory says it's potentially undervalued now, I want more of a pullback, at least under my cost basis, and really in the $32 to $33 range or lower. Well, that is it for this one. Let me know what you think of Bank of America. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hopefully, you're on your own investing journey. And if you have not started your investing journey, drop a comment down below and let me know why. What is keeping you from investing in the market? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Bank of America you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll try to work it into the rotation on a day it pulls back. And with that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk against money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.